Hello and welcome back to Global Value. In today's video, we'll be performing a fundamental analysis of Bank of America Corporation, ticker symbol BAC. Why are we looking at a bank, and specifically why are we looking at Bank of America? Historically, banks are avoided by many retail investors as being too difficult to understand or too cyclical. Banks are more or less a commodity business, with money being, again, more or less the ultimate commodity. However, looking at the track record of some of the best value investors of all time, a lot of them have done very well by investing in bank stocks. In fact, both Warren Buffett and Lee Lu have done extremely well in the banking businesses that they've invested in. And Bank of America specifically is Warren Buffett's largest bank holding. Bank of America is the second largest holding in the Berkshire Hathaway stock portfolio. That makes up over 11% of their overall portfolio, second only to Apple. And Berkshire Hathaway owns about 12.5% of Bank of America Corporation. In the past, Warren Buffett has really described Bank of America as one of the best-in-class, structurally important United States banks. Warren Buffett has also said that Bank of America's CEO, Brian Moynihan, is one of the top bankers in the world. So with that said, Bank of America, at the time of recording this video, is currently trading for $32.31 per share. Year to date, similar to others in the banking sector, Bank of America is down. They're down about 28%. Going back a year, they're down 20%. Going back 3 years, even with the pandemic, Bank of America has still returned about 5% compounded annually. Going back 10 years, they've returned 16% compounded annually. Bank of America was one of the banks that was hit hardest by the global financial crisis in 2008. With their stock price hitting a low of about $5 in February of 2009. Since then, Bank of America has done quite well. They significantly reorganized their business and their risk profiles, and now they're one of the world's most efficiently operated banks. So Warren Buffett, through Berkshire Hathaway, has made significant purchases into the Bank of America during and post the global financial crisis, and he has done quite well with that investment. Again, over the past 10 years, they've returned 16% compounded annually, and that's not including the dividends that Bank of America pays out. Bank of America is just about $1 over its 52-week low, which is down quite a bit from their 52-week high. Bank of America is one of the largest banks in the world. They have a market cap of $258 billion. For some background about the business, Bank of America is one of the largest financial institutions in the United States, with more than $2.5 trillion in assets. It is organized into 4 major segments: consumer banking, global wealth and investment management, global banking, and global markets. Bank of America's consumer-facing lines of business include its network of branches and deposit-gathering operations, home mortgage lending, vehicle lending, credit and debit cards, and small business services. The company's Merrill Lynch operations, acquired during the global financial crisis, provide brokerage and wealth management services, as does U.S. Trust Private Bank. Wholesale lines of business include investment banking, corporate and commercial real estate lending, and capital market operations. As of the end of last year, Bank of America served approximately 67 million consumer and small business clients, with approximately 4,200 retail financial centers, 16,000 ATMs, and digital banking platforms with approximately 41 million active users. The company was founded all the way back in 1784 and is based in Charlotte, North Carolina. So with that background about why it's important to look at a Bank of America, what the stock price has recently done, and what the business does overall, let's get into our fundamental analysis. This video is going to be something special. We're modifying the 8-pillar analysis that we usually do, which has been popularized by Everything Money, to include metrics that are geared specifically toward banks. We're going to look at 10 different towering metrics of what makes a quality bank a quality bank. So let's get right into this. Starting off with tower number 1, we want their average 5-year PE to be below 12.5. This valuation metric is more in line with the historical averages for the banking industry. So currently, Bank of America is trading at 9 times earnings, which is below that metric. However, over this time period, Bank of America is trading at just under 14 times earnings. So that's going to be an X on our first tower. Tower number 2, we want Bank of America to have an average 5-year return on equity that's above 9%. Bank of America has earned respectable returns on equity over this time period. Even in 2020, during the pandemic, Bank of America was still able to earn about 7% return on equity, which that in and of itself is another sign of being a great bank. Even in the worst years, great banking businesses are able to earn respectable returns on equity. Averaged out over this time frame, Bank of America earns about 9.24% return on equity. So just above that metric, and that's going to be our first check on tower number 2. Tower number 3, we're looking for 5-year revenue growth. Bank of America has grown their revenues from just under $84 billion in 2017 to just under $94 billion in 2021. So about $10 billion in total revenues growth over the last 5 years. That's another check. Tower number 4, we're looking for 5-year net income growth. Similar to revenues, Bank of America has grown their net income. They've increased their net income from $18 billion in 2017 to about $32 billion in 2021. So that's 3 checks in a row as we get another check on tower number 4. Because banks are kind of the inverse of traditional businesses, where their loans are actually going to be their assets, instead of valuing a bank based on its free cash flows, we're going to be valuing the banks based off their earning power. We also want to see what their average 5-year net income was. Net income and earnings are synonymous. So over this time frame, Bank of America earns about $25 billion in an average year. We'll use that later when we're evaluating how the business compares to its current market cap. So put that one in the bank and we'll come back to it. Tower number 5, we want to see decreasing shares outstanding. When you purchase a share of stock, what you're really buying is a fractional ownership percentage in a business. So as a company buys back shares and decreases the amount of shares outstanding, they're increasing your ownership of the business and ultimately increasing the percentage of profits that you're going to be entitled to without you having to spend a dime. So Bank of America has bought back about 20% of their shares in the last 5 years. They've decreased their share count from about 11 billion shares outstanding down to about 8.6 billion. So that is an excellent sign to see here. Next up, tower number 6, we're looking for 5-year deposit growth. Deposits are the money that a bank takes in that they're able to turn around and lend out. Bank of America has significantly grown their deposits from $1.3 trillion in 2017 to over $2 trillion in 2021. That is another big check on tower number 6. So between towers 5 and 6, we're seeing high deposit per share growth, and that is an excellent sign and a very key banking metric. Tower number 7, we're looking for their interest that they pay out on deposits divided by their total deposits to be stable or decreasing. This tower is important because banks as a commodity business are ultimately going to get these low-cost producer advantages by having these high deposit bases and paying out smaller amounts of interest relative to their peers. So here we really get to see the scale that Bank of America operates at. They have a staggering amount of deposits that has steadily grown each year, and relative to their deposits, they're not paying out much interest at all. In fact, as their deposits have grown, their interest expense has actually decreased. That means that Bank of America's cost of funds is even cheaper today than it was in 2017. So that's another huge check on tower number 7. There's a lot to like about Bank of America so far. Tower number 8, we want their non-interest expense divided by their total deposits to again be stable or decreasing. This metric is also known as the efficiency rating for banks. It's measuring how efficiently a bank is able to operate. Again, trying to have either a structural or a low-cost producer advantage. Banks want to try to keep this non-interest expense as low as possible relative to their total deposits. While their non-interest expenses have slightly increased, their overall deposit base has grown faster than their non-interest expenses. So this is going to be another check on tower number 8. Tower number 9 is looking at the overall safety of a bank's deposit base. So we want their institutional deposits as a percentage of their total deposits. So institutional deposits divided by their total deposits to be stable or decreasing. Ideally, we want this to be as close to zero as possible. So from 2017 to 2019, Bank of America did have some institutional deposits, about $52 billion worth out of their $1.4 trillion as of the end of 2019. However, they had no institutional deposits in 2020 or 2021. So that is going to be another check on tower number 9. It would be a lot more difficult to lose $52 billion of retail deposits than it would be to lose institutional deposits. So it's good that their overall deposit base was still able to grow and they're less exposed to institutional deposits. So again, that's another check on tower number 9. So far, we have 8 checks on 9 towers. Looking at our 10th and final tower, we want Bank of America's market cap to be below their average 5-year net income multiplied by 10. So again, in an 8-pillar analysis, we'd be multiplying this by 20, and we'd be multiplying it by their free cash flow. With banks, earnings are what matter, and 10 is going to be a starting point, again, relative to these historical averages of banks. So Bank of America has a $258 billion market cap. When we multiply their average 5-year net income of $25 billion a year times 10, that brings us to $250 billion. So we're about $8 billion shy, and that's going to be an X on our final tower, tower number 10. Lastly, many people invest into banks because of their relatively high dividends. And while yes, banks are typically older businesses that are established and do tend to pay out relatively higher dividends than the overall market, we don't want to blindly chase dividend yield. Instead, we want to take a look at their dividend profile. We want to make sure that the dividend is healthy, sustainable, and supported by their earnings. Bank of America currently pays out a 2.2% dividend yield. We're looking at per share metrics here, but their dividends have risen each of the past 5 years. Their dividends have doubled in this time period. Their earnings per share in blue have been more than enough to sustainably pay out these dividends, and that's referenced here by this column in green, their payout ratio. Ideally, we want a business's dividend payout ratio to be below 60% to know that they're able to pay out that dividend with plenty of room to spare, and Bank of America is able to successfully do that. Their highest payout ratio was only 43% in 2020. And as of last year, they had a 25% payout ratio. They are producing more than enough earnings to be able to pay out this dividend sustainably and healthily into the future. There's one more banking valuation metric that many people get tripped up on, and that's this return on asset number. Warren Buffett has a very simple explanation of this. If a bank earns 1% return on assets, it's going to sell for about book value. If a bank earns more than 1% return on assets, it's going to sell above book value. And banks with return on assets below 1% are going to sell below their book value. Warren Buffett has also stated that book value isn't the key to valuing banks. Instead, it's earnings that are the key to valuing banks. So in summary, Bank of America is only off on a historical valuation. Based on their current PE, they would actually check the box on 9 out of 10 towers. They're able to earn steady returns on equity, and they produce steady deposit per share growth over the past 5 years. The bank is also exceptionally well managed. They have a very low cost of funds. Their banking efficiency has continually increased since the global financial crisis, and they've further shored up their deposit base by getting rid of their small percentage of institutional deposits so that they are now retail funded. With the stellar operations, the great capital allocation, and the overall return of value to shareholders, it's no wonder that Warren Buffett likes Bank of America so much. And it's no wonder that Bank of America is the largest banking position in the Berkshire Hathaway stock portfolio and Warren Buffett's second largest position overall. And again, Berkshire Hathaway owns 12.5% of the Bank of America Corporation. This was a video geared toward learning in public. These 10 tower metrics are specifically geared toward banks. They draw inspiration from the 8 pillars, even though half of them are directed toward banking businesses. By no means am I an expert on banks. And even though Warren Buffett likes Bank of America, this type of analysis is not telling you to run out and buy that business. This is a starting point for you to dig further into the company and do your own research and come to your own independent conclusions. This is not financial advice. As this is my second stab looking at and researching a bank publicly, I'd really appreciate feedback on this video. Any input or advice that you have would be greatly appreciated. So with that said, if you enjoyed the video, please be sure to like the video. Comment down below what business you want me to take a look at next time, and subscribe to the channel for more stock analysis videos. Thanks for learning about Bank of America with me, and have a great day.